Good morning. Personal debt versus business debt. Which one will you pay off first? Part 2. Business expense is a business deduction. So, interest on business credit cards is tax deductible. In the first and on the during the first session, we talk about mortgage, what the business are, what the debts are. So the personal debt was mortgage that you are trying to pay off, and the business debt is a credit card debt. So the type of what kind of debt that the credit card interest is related to. So we use the credit card to make purchases of raw materials to manufacture goods that went in stock for sale, and we purchase finished product to resell as well, and we private label. So part of those purchases are still including the balance that we have. So the credit card, the interest you are paying on that business credit card, I'm just using my example to illustrate my point. So the interest that we pay on that credit card is pretty much tied to the inventory we have in stock. So because of the nature of the debt, the way we deduct that on our business tax return will be specific. It's just not just one way of deducting interest expenses on your business return. It depends on what you use it for. So for our case, it's tied to the goods. So that means when we sell the good is when we deduct the portion of the interest we pay on that credit cards. So for S Corp, it will go on Form 1125A line 2, purchases of the raw materials and the goods. It will go there, and when you calculate the cost of goods sold, that will go on line 2 of Form 1120S. So a portion of that interest you pay during that year will be included in the cost of goods sold and decrease your income. For L.L.C. filing Form 1065, interest pay on your credit card, business credit card, will go on Form 1125A as well, line 2, purchases, to be included in cost of goods sold. So if you didn't sell everything, a portion of that interest will be tied to your goods in stock, and a portion of it will be included in the cost of goods sold, and then that will be transferred to the cost of goods sold on your Form 1065. If you are a sole proprietor and you use the credit card to purchase good to resell, or raw material to manufacture the finished good, then if you don't sell everything during that year, the interest, you could include the interest on line 39, other expenses, on part 3, cost of goods sold, and that will be taken into consideration to calculate the cost of goods sold that year. So a portion of the interest will be included in that cost of goods sold, and that will decrease your income as well, your taxable income. So that's how the interest expenses paid or generated by using that credit card, the credit card interest paid during the year, based on this particular situation, since we use it for goods, will be tied to inventory, and that's how that should be deducted on business tax return. So once again, should we pay the personal debt, which is the mortgage, first, or focus on paying the business debt first? Well, business debt is deductible on business tax return, decreasing your taxable income, but your personal expense, even that's a mortgage in our example, it is not deductible on your 1040. If you are filing Schedule A under mass deduction, it has to be higher than your standard deduction, and this day is not. So that means the interest you pay on your mortgage is not going to be deductible on your, it's not, you are not going to use under mass deduction, so that means it's not going to be deducted on your 1040. So once again, based on that fact, it is better in our situation to focus on paying more toward our mortgage to pay it off, and continue to to invest in our business. Like $400 is what we have done, $500 in the past, but now we are doing 400. Continue to invest a little bit in our business and let the business generate income to pay the credit card debt, the business credit card debt, and in the meanwhile, any interest we pay on that credit card is business deduction, is tax deductible, and that will lower the income, the profit, the taxable income there for that business. Thank you for watching. I'm Afiavi Otune Liberman, creators of Lemon Consulting LLC YouTube channel and owners of Nina Soap, and our website is ninasoup.com. That's the blog, and we have our natural product label. Our natural product is ninasoup.com, and we have our custom apparel label.com. Thank you for you all that subscribe to our channel. Thank you for watching our videos, and thank you all that commented as well. If you wanted to see those business forms that I talk about, where you will deduct those expenses, let me show it to you. Let me see if I have them open here. And in case you are wondering what kind of debt I'm using in this example, if you have not watched the first video, the mortgage has a balance of $38,000. We pay $2,000 extra to our principal every month. The minimum mortgage required to pay every month is $900. The interest for the mortgage is 4.25%, and the business is a credit card debt of about $3,000 with interest rate of 16.99%, and the minimum interest, the minimum due there is $47, and we pay about $400 a month, and the interest charge is about $29 a month, while the mortgage interest pay a month is about $130. So here is Schedule C. Let me go all the way up for you to see. So that's Schedule C. So if you are a sole proprietor and you have that dilemma, you use your credit card for good, so it's good to just put the interest you pay during the year on the credit card here, and as you calculate cost of goods sold, a portion of it will be included in it, and that will come and then that will be reported on line 4 of Part 1 income to decrease your gross receipt or your sale. So that will be the gross profit here. So if you are L.L.C, you will use form. Let me go up first. So that's 1065, form 1065, and the income portion here, you have line 2, cost of goods sold, but you're not just going to put it here. You need to fill out form 1125A and attach it to your form. So form 1125A, you will put the good purchase during the year, the cost of it here, and you can include the interest paid during the year on the credit card that you use to make the purchases of the goods here as well on line 2. And that will, and then a portion of that interest will be included in the cost of goods sold here on line 8, and that will be reported on line 2 cost of goods sold here and decrease your income here. So if you are an S corp, you will still fill out that 1125A, just like for the L.L.C. Line 2 will include the cost of the purchases that you made during the year, goods wise, raw materials wise, and that will include the interest paid during the year for the credit card as well, that you use to make those purchases tied to your inventory. And I repeat, purchases tied to your inventory of goods sold or goods to sell. So, and then cost of goods sold from that form will be reported on line 2 here. So since that will, the cost of goods sold will increase by the portion of the interest you pay will be included in the cost of goods sold here. If you didn't sell everything, if you sold everything you purchased, chances are you will deduct the full amount of your interest paid on the card. But if you still have items in stock, then while you sold, the portion of the interest paid related to the goods that you sold will decrease your income here. So you decrease the interest paid on the card as you sell the good. Pretty much it will be tied to goods in stock. So that's how, in that particular example, when you use credit card to make purchases and you have debts on the credit card, you are paying interest on it depending on what you use it for. And now we just took one example here, because we use it to purchase goods to resell or go to manufacturer. So our debt is tied to our inventory, so we deduct what we paid when we sell the goods. Thank you so much for watching our video.